Hi everyone. Today I just want to show you one of the best advantages of top-down analysis using just candlesticks. Many of us as traders are aware that the top-down analysis is one of the most powerful ways to trade this forex market. And the moment you are able to understand how to do it, especially with candlesticks, you find yourself being at an advantage. So in this video, I would like you to pay very much attention. Don't skip any part because like I say, and I've said it before, the devil is in the details. So candlestick gives you the opportunity to look into the details and find a way to get into the market. So as usual, let's begin. In this video, you're going to see, so what do we do and how do we do our top-down analysis using just candlestick? We start with a monthly chart. So on our monthly chart, we look for the direction in the market. Now, in looking for direction in the market, what we do is that we look into what we call the market structure. The market structure, okay? Then we don't stop at the market structure. We also go a little further because with candlestick, we look into what we call candlestick structure. The candle structure. I know the traditional way of trading is just to look at the market structure, the higher highs and the higher lows, swing highs and the swing lows. But for us with candlesticks, we go further to look into the candlestick structure. So in this video, I'm going to show you what that means. That's why I said don't skip any part. So let's go. Now, the market structure here, what does it tell us? For us to know the direction of the market, because candlestick gives you three major areas. First, it tells you about direction in the market, which is important. Second, the candlestick tells you about the target. Then third, candlestick tells you about the entry. These are the things that we use candlesticks to do. Now, I haven't mentioned these three things. I also say that with analysis in the market, you should know where the market is coming from. You should know where the market is now. Then you should know where the market is going. So with this, our top-down analysis, let's look at it very carefully. So here you have your monthly time frame. So let's look at our market structure. So the market went up, came down to this area, it went up again, couldn't break this area. So here we have swing lows, swing highs, and swing highs. Then the market came down and it couldn't break this area. So since the market couldn't break this area, it made a double bottom. From here, we'll be looking at uptrend. Okay, remember this is a monthly trend. So we'll be looking at uptrend, expecting the market to break this area so that the market can be going up. But the market went up. It couldn't reach this area. So what is that telling us? It came down. Okay, we expect it to go up. So he made another double top here. So with this double top, we're expecting the market to start coming down. This is our market structure. Okay, we talk about all of these details in our class. So from here, we expect the market to start coming down. Then you can also see that there is a point here on our trend line. There's also another point here on our trend line. So if we're here, we'll have started trading from this area because this is 0.3. So we'll be trading from this area, targeting a minimum of this area. Okay. So if you look at it, how many pips are you looking at here? So let's make it bigger and see what we should have done if we are trading from this area. Because we noticed this is a level, this is a point here, second point, and this is 0.3. So from here, we will have been trading and trading to target this area. So let's see what we'll have been able to make. Okay, let's put our ruler and check it. So from here, we'll have targeted to this area. Okay. So we can see that from here, we will have been able to make over 600 pips. Over 600 pips from here to here. Oh, nothing to trading. So we now have our opportunity again to get into the market. So what's our opportunity again? We are looking into the market on Z3. It came down, it broke this level. Okay, and came down. So now it's going up. And it's touching this area again. It's touching this area again. So we have 0.2, 0.3, and this is 0.4. So from this level, we are now looking at opportunity to get to this area now. Helping the markets, at least we come here and give us a very good trade. So let's take out this and see from here. What do we do? This is a monthly trade. So we go into our weekly to see how we can get into the market. Okay, how we can get into the market. This is monthly. So let's go at our weekly. So on our weekly now, we have seen our market structure. So on our weekly, we are looking for our candlestick structure. Okay. Now, the candlestick structure we have here is we have a swing low here. We have another swing low. So at the close of last week, we are beginning to see that this candle is supposed to be a pullback too, because we already touched this area. So this candle might go to this area and touch it, or it might not again. So that's what we have here on our candlestick structure. I think I should make it a little bit bolder so that you can see what we're talking about. This is it. So candlestick structure, this is one candle. This is second candle, a new low. So this is the third candle, okay? And this third candle closed here with a rejection. So this is not a pullback two. This is actually a pullback of this market structure because of this area. So the next candle here will come down here. So that's we can go to our daily candlesticks. Okay, let's go to our daily candle. Now, on our daily candle, we can see very, very clearly. On our daily candle, what do we have? We have the market come down, then the market pulls back to this area. What did it give us? It gave us a double bottom, a double top here. Beg your pardon. So the market couldn't break this area. The market couldn't break this area. So here we are entering the market from here, targeting the first area here, the second area here, then the third one is on a higher time frame. So let's look at what the market is going to give to us, because let's pick our ruler and see the first one is from here to this area. Okay, so our first is H3 pips. Okay, H3 pips to this area, but we are looking much more than that because we are trading on a very higher time frame. So let's take it out and let's see how we're able to enter the market. So we go to our area of interest, which is 1 hour, so that you can see how we enter this market. So our area of interest was here. We have our area of interest here. Okay, so the market touched it. It came down. So we expect we're not just going to enter from here. We expect the market to go up again, touch it, and not able to break it. Even in this way, we don't still enter with H1. We enter with a low time frame. So let's see what's happening in your time frame. Very interesting. This is our area of interest. The market has touched it. It's touching it again here. So let's go to a lower time frame. We have all of these details in our class. So let's go to 5 minutes and see what we did in 5 minutes to get into the market. Now, in our 5 minutes, remember the market has touched it here, but will not enter from here because the structure, the market structure, you can see it's going up. So the market could come again and break it. So we wait to prove that this area cannot be broken. So that is why we now look for what we call our double top. So the market came down again. Actually, if you go in a low time frame like 2 minutes or 3 minutes, it becomes very clear. But let's just use 5 minutes. So the market came down, touched it again the second time, and gave us our double top. Not able to break it. So we just look for our candlestick entry. This is our candlestick entry. This is the candle that's not able to make a new high. So it closes here. So we enter the market from here, put our stop loss here. Then we ride this market. Now, our first step profit is going to be risk to reward 1 to 10 as our first step profit. We had yesterday a little bit about to touch it, but it didn't touch it. So yesterday, the market came and went to this area, didn't touch it, but we are not moved because we are looking at our top-down analysis. So the market is pulling back, and we know that it's going to come down again and give us our risk to reward 1 to 10. One other thing that we do, or you can do, is to target 1 to 5. It is going to be easily reached. The 1 to 5 is 2%, so that your profit will still be 10%, especially if you are trading often. Okay? And no, 5% is a lot. If you reach 1% to meet 5% is a lot. But right now, risking 2%, risk to reward 1 to 5, you've made 10%. That can easily be reached. Okay? So let's see. If you are doing risk to reward 1 to 5, you will have been able to reach the target right here. Of course, right here. Okay, we'll have reached our target. But we are looking to reach to reward 1 to 10. So this is how you do your top-down analysis. In our top-down analysis, we look for a direction, we look for our target, and we take a powerful entry. Okay, very powerful entry. Look at our entry. Our stop loss is very, very small. Look at our stop loss. Our stop loss is what? Is just 7 pips. Our stop loss is just 7 pips. Meaning that from here to here, we make 70 pips. 70 pips, we are risk to reward 1 to 10. And when we are growing, we are looking at, let's see what we are looking at overall from our weekly. Let's see what we are looking at. How many pips are looking at? We're already in this tree, but this is actually the best thing to do at the close of this candle and in a week. We're already making a new low, then we should be able to go. But our top analysis and the candlestick has given us opportunity to get into the market very fast. So let's see how many pips we get from here to this area. You see, we have over 600 pips. We have over 600 pips. Okay, from here to here. And if we have 600 pips, and we are risking only 7 pips. So we are going to be making almost 500 pips. Okay, almost 500 pips. So let's see how the market comes out, and we come back and give you updates. But the moment we have made our risk to reward 1 to 10, we are good. Then we can now begin to see how we can trade the market and see where the market is. Thank you very much. I will keep you posted with this trade so that you can see how our trade comes out and how our trade works. So bless you. And like I said, you have watched this video to this point. If you dare me, I'm going to give you a very powerful video. Okay? Very powerful. Thank you and God bless you.